Hi guys, thanks for tuning in. In this video, I'll go over employment options that you may not have heard of or even considered after you graduate, and some advice in finding a job. So let's get started. So your final years are about to graduate and have started looking for a job. The question now is, do you become an employee or a sole trader? Do you have one employer or multiple employers? And when should you start looking for your job? Everyone is familiar with the concept of an employee, whether it's your summer job or as an optical assistant on Saturdays. As an employee, you're hired by the practice and get paid on a regular basis, and the tax or PAYE has been deducted already. You also get additional benefits as an employee like KiwiSaver, annual leave and sick leave, whereas a sole trader is a little bit different. As a sole trader, you're not an employee, you're more a contractor or self-employed, which is also different to a locum. A locum is a fill-in, but you can have the same business structure. Being a sole trader, you are self-employed and run your own business. The practice you work for hires you and you give them an invoice for your time. As a sole trader, you'll need to file a tax return at the end of the financial year and pay your own taxes. That is, the tax isn't automatically deducted for you. Because you're not technically an employee, you don't get the employee benefits I discussed earlier. You don't get annual leave, sick leave or KiwiSaver. So to offset this, you charge on average 20% more than what an employee would earn. If we do a side-by-side comparison, you can see there's less to know when it comes to becoming an employee, just because it's simple and it's the most common form of employment for all industries. But there are definitely benefits to being a sole trader even as a new grad. So things to know about being a sole trader are, you still get a fixed and regular income, but you need to send the practice you work for an invoice. One big benefit as a sole trader is the tax deductible expenses you can claim. For example, a percentage of the power bill and internet is a deductible expense as you have home office space. This also includes rent, and equipment like Volk lenses, BAO that you bought as a student can be claimed as an asset. Even things like your cell phone and laptop can be claimed. How expenses work is that you technically pay less tax compared to someone on the same salary as an employee. I'll go into a bit more detail later on, but you need to keep track of your accounting. You can use an Excel spreadsheet or use something like Xero or MYOB. So, how do you pay less tax as a sole trader? The tax you pay is based on your income or profit. Like any business, you calculate profit by sales minus expenses. So in this example, if we say your salary or sales is $90,000 a year and you had $10,000 worth of expenses, such as what we discussed earlier, you only get a profit of $80,000. Therefore, the tax you pay is on the $80,000, not your sales value of $90,000. I went through this earlier, but some examples of what you can claim include motor vehicle costs, including petrol, your Wolf Rego insurance, home office expenses like your rent, your power, your internet, technology such as cell phones, laptops, printers, printer ink, and the equipment and textbooks you bought as a student. Note, items that are worth more than $500 are considered assets and you have to claim a portion as an expense each year, which is called depreciation. All this can be found on the IRD website. Next thing I'll go through is the option of working for one practice or multiple. The term is job sharing when you work at multiple different practices or employers. For example, you might work at one practice 2 days a week and another practice 3 days a week. It is common in optometry, but also in other industries too. For example, in the media industry, you get journalists working in both TV and radio, and doctors might work in both public and private practice. If you do decide to job share, you could be an employee for both, an employee for one, sole trader for the other, and get the benefits of both, or sole trader for both. The third thing I wanted to share with you guys was when you might start applying for jobs or when you might see your dream job advertised. Depending on who you work for, the time when jobs get advertised varies. In accounting and law, for example, you have large corporates like KPMG, EY, and PwC, and they all have graduate programs in place where they hire new grads and they move up the ladder the following year. And with the volume they hire, they advertise these positions very early. So you might have friends applying for a new grad job in semester 1 of the final year of study. You can see the new grad model exists with corporate optometry as well. Whereas an SME or small and medium enterprise usually have less than 10 staff and don't have graduate programs. So in a small independent practice, it doesn't make business sense to hire someone for a year, train them on the workings and processes of the business for them to leave again within 12 months. They only look for a new staff member if one leaves or the business is expanding. So most likely you have to wait for someone to resign first before the job comes up. Therefore, you most likely won't see a job advertised with a small independent practice 6 to 12 months in advance. And why is that? Most employment agreements say you have to give, say, around 4 to 8 weeks notice. So really, the job will only be advertised 2 months in advance once they know someone is leaving. And if you're looking to start in February or March, 2 months notice is really going to be around December and January. But in December, most employers probably aren't thinking about advertising for a new staff member. They're most likely thinking about Christmas, and in January, they're catching up on a work they didn't do in December. So it's really February when the jobs start to get advertised. Any questions? Flick a comment below, and thanks for watching.